Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 6th of August, comes to you from London. Big falls on the markets last night. The US was down 3%, Nasdaq down 3.6%, and we've seen, of course, a knock-on effect in Asia, and Europe was down heavily yesterday before closing on that US fall. So the dollar actually falling away quite significantly here. The trade wars between China and the US hotting up, and a lot of rhetoric now on currency manipulation, all sorts. And we're seeing the dollar actually in that short-term downtrend over the last few days, although medium and long-term still looking pretty strong. And in fact, on the medium-term chart, we rose quite significantly over July, and we're just giving up some of that move this August. So in chart terms, this is a retracement. No matter what you sort of read and fear about the currency. Euro looking stronger on that weaker dollar, but still medium and long term bearish. Dollar strength being the key on the longer term. The Japanese yen is the strongest of all, safe haven for in times of uncertainty, and we're seeing the dollar falling away very strongly against the yen. So we're bearish on all three time frames. Interestingly, we made a new low on the yen. If the dollar goes below that low, we've got a further 7% downside, so that would be significant indeed. And we're seeing targets here of 7%, really being the key there. So the dollar against the yen is looking more clearly bearish. Sterling rising a little bit. We're sitting at 121.80 this morning, just starting to wander into bullish territory against the dollar, but wouldn't be surprised to see this to be short-lived. We are very clearly bearish on the medium and long-term charts with downside targets to parity, so that's a really scaring prospect for sterling. And looking at sterling against the euro, we're seeing the weakness really showing through here. We've got downside targets below parity here as well, 8% lower. We've got targets to 99 cents. 102 is the next big one, and 107.50 now not far away. So sterling really looking pretty weak at the moment, and against the Swiss franc we're seeing potential of 4% further downside there, and on the longer term charts as much as 12% downside. So we're really seeing a fall away there. Against the Aussie dollar, we're seeing sterling actually rising as well. Bitcoin sitting above $12,000 this morning, up 3.7%, so looking really strong, looking like a consolidation pattern before we run again, finding quite good support on the medium-term chart. No short-term targets, but medium and long-term we are seeing upside potential of between 10 and 13%. Looking to markets now, the S&P 500 index fell very sharply yesterday, as we were saying. No clear downside targets on this market at the moment. It's just gone into free fall. Of course, this move down will produce a downside target, and for that to be worrying, we would need to rise off a low and then fall below that low to activate that target. At the moment, we're sitting right on support, so we wouldn't be surprised to see markets bouncing here, but the short-term chart is very clearly bearish. The Nasdaq 100 similarly sitting on the daily chart on the lagging line, so we wouldn't be surprised again to see a bounce around these levels. And the Dow fell a massive 760 points yesterday, so we are seeing again testing this level. The Russell 2000, the broader based index in the US, actually falling away more heavily, and we're seeing here that we are in bearish territory on the long-term and the medium-term charts already, failing to make new highs, the broader-based market, and that is a big concern for US stocks, the fact that we're seeing this market breadth of the second-order stocks just not making new highs while the first-order stocks have been. So there's a little bit of a divergent warning sign there. The S&P future is up 0.6% this morning, expecting a bounce there as well, and the Nasdaq even up 0.8%. Remembering we fell 3.6% yesterday, so this is just a small retracement on the fall, but it does suggest that the US market will open higher today. The big question will be, can it build from here, or will we go lower? The index of the UK 100 index is down 1/3%, and that's starting to look quite bearish. If we sit at these levels for too long, we are in bearish territory on the long term and the medium term chart, with this lagging line, the blue line, through below the cloud. And looking at the FTSE 250, we're also seeing this morning we're actually up 0.25%, but we are bearish on the charts here on all three time frames, so it's a little bit disconcerting for the UK stocks. And in fact, if we look at Germany, we're in much the same picture here. We're bearish on all three time frames now. We've still got a further 3% downside. This target was given earlier in the week and now met. And if we look at the CAC Courant, we're up this morning, but we are again bearish on all three time frames now. The lagging line maybe not quite as clearly bearish, but interestingly, Europe is turning more bearish already. We're in downtrends on a lot of these charts. We're not quite seeing that yet on the US. Japan was down by 0.4%. It's bearish on all three time frames as well. And the Hang Seng really falling away there, 0.7% lower, and again diving on all three time frames, making new 12-month lows there on almost. We're certainly making lows for the year on the Hang Seng, so that's looking quite worrying. And the Shanghai Composite chart also falling away. China obviously exposed to this trade war battle, and we are seeing Chinese stocks falling away as a result. Interestingly, the Indian market, the Sensex, bucked the trend. It was actually up yesterday, but the charts are bearish on the medium and long-term charts, so not really changing the chart picture there very much. And the Aussie market plummeted as well, and we're very clearly in bearish territory, although medium and long term. Aussie market, having made very clear new all-time highs, has less is a less bad looking chart because it is still holding a lot of that all-time high territory. But we can see here we've had a very big down week for the Aussie market. Brent crude is up slightly this morning, having plummeted yesterday. We're just below the $60 mark at the moment, and we're bearish on all three time frames. The time of year, of course, for crude is that we do fall away, and WTI also falling lower as well. US nat gas sitting at $2.10, very much in the doldrums. We're just really waiting for a fall below that $2 mark. Gold rocketed yesterday, as we might expect, and it's looking very bullish on the charts now. We've got short-term upside targets, some 149% higher, and long-term targets 15-16% higher. So gold really just doing its thing, as we've been saying for some time. Gold looking very bullish. Silver also pushing into bullish territory now on the long-term chart, so looking pretty good there as well. US 10-year yields. The chart really just falling away here. 172 was the low point we saw yesterday. We actually were at 168 at one point, so 1.68%. Really hard to imagine when we were looking at over 3% just a year ago. The outlook for US yields has really just fallen away, and the bond market has rocketed. Yields have plummeted and bonds have risen. We're seeing the German bond rising further, negative interest rates in Germany. We saw the Dutch market for the first time yesterday going into negative rates as well. So we're seeing that across Europe. So a lot of turmoil there in bond markets. Looking at the individual stocks now, we see the sea of red in the indices. Interestingly, the Sensex and the Nifty in India bucking that trend. We're seeing a little bit of recovery this morning in Europe based on the US futures, of course. Looking at the Dow, it was pretty red across the board. Every single Dow stock was down, and the worst performer was Apple, down 5%. Not enough to really change the picture very dramatically on the chart. We're still outperforming the Dow Jones by 15% this year with Apple, but really big falls away there. And we saw Visa down 4.8%, IBM down 4%. So a lot of big stocks just falling away quite heavily there. Looking now at the Nasdaq 100, the worst performer there was Celgene. Sorry, the best performer. I click on the ranked by percentage, and the best performer was down by 1%. So Celgene, disappointing there, but they were actually a strong performer yesterday. The C-Trip were down 8%. And so we saw lots of big moves here. Activision Blizzard down 6%. Those shares really in the doldrums there. So we are seeing quite a lot of falls away there. As well, and we mentioned Apple. They were in that fall as board as well. taking a look at the Aussie market, the worst performers here were the best performers, Linux. They were 7.8% higher, so that was looking pretty good. And then on the downside, we had WiseTech Global. They were down 8%, so looking pretty worrying there as well. Looking at the Indian market now. We had India Bulls Housing. They were up 6%. Remember that India bucked the trend yesterday, so they were looking pretty good there. Had quite a lot of stocks in India up significantly. On the downside, we had Z Entertainment, quite often in the laggards board, having underperformed the Dow by 60% this year, so still looking very bearish there on that chart. Looking now to Europe this morning. We start by looking at the UK market. Prudential up 1.9%, so that's the best looking stock at the moment, but they've had terrible falls there. We see the love prices coming here from Yahoo Finance, but certainly Prudential looking quite worrying on the chart despite being the best performer this morning. Intercontinental Hotels came out with results this morning. The shares are down, but the chart still looks pretty good, and again outperforming the Dow by 12% this year so far. Rolls-Royce out with results this morning again, making an announcement on cash generation, and that we're seeing also just looking a little bit better there too. The FTSE 250, we're seeing Rotork, the best performer, up 7.8%, and if we look at Cyrus Minerals, they are massively down this morning, down 24%. So, and then Metro Bank down a further 3%, just struggling there too. Looking now to the European market, the majors in Europe, Vivendi up 6.8%, best looking stock at the moment, and quite a good looking chart there. Deutsche Post up 4%, not quite enough to take this chart into bullish territory. And then on the downside, we have Eni in Italy. They're down 1.5%, so just looking a little bit worrying there as well. The chart pretty bearish. That's it for today. Until tomorrow, happy charting. See you then.